Hello, everybody. Every 4 years, uncertainty about the next president and their policies is top of mind for investors, and 2024 is no exception. Given the election will likely be a rematch between the last two presidents, we'll see how things unfold over the next few months, given the challenging debate just the other day. And so let's answer some commonly asked questions from performance in an election year. How about performance following the election? Market performance under different presidents, Republicans versus Democrats. Is there a way to take advantage of perhaps stock markets outperforming under a Democrat president versus a Republican president? And can I sort of make this a strategy to move in and out of the stock market based on who's president? And what about party control versus a divided Congress? Is there a benefit to a divided Congress on average or party control? It's pretty interesting to see the differences, so make sure you stick around for that. Okay, first things first, let's look at market performance in election years. So over the last 75 years, we've seen the average return has been about 7.3%. Of course, the bands here are extremely wide. You have the 2008 election where the market was down 38% following the GFC, or you have a 1980 time period where the markets were up 26%. And on average, the return when a Democrat won was 5.5%, and the average return when a Republican won was 8.7%. Okay, so how about your 60-40 bond portfolio? So if we go back to almost 100 years, a portfolio of 60-40 stock to bonds delivered positive returns in all but four of the past 24 presidential election years. So pretty impressive stuff. Okay, and so in the year following an election, the numbers aren't too different, similar returns of about 7.83%. And of course, once again, this can vary significantly, right? You have a George Bush era where he entered the presidency at the heart of the dot-com bubble, or you have an Obama who saw a strong rebound in 2009 and 10 following the GFC in 08. Okay, so we looked at the year of an election, the year after. Let's go ahead and look at the 4-year term now, Democrats versus Republicans. And so when you look at the numbers, you can see the Republicans look good for the first few months, and then on average, the Democrats come out ahead over the 3-year and 4-year time period quite significantly. And of course, these numbers can be quite skewed, right? You have the Bush era that had two exceptionally challenging time periods, so much more going on beyond just one factor of who's in office. And with that in mind, let's go ahead and take a look at the market performance under different presidents. Okay, so dating back to John F. Kennedy's inauguration in 1961, the S&P 500 posted a negative return during only two presidencies. That was Richard Nixon and George W. Bush. So Richard Nixon, he inherited an economy already grappling with inflationary pressures from the 1960s. Remember, the US as well was taken off the gold standard, which led to uncertainty of the global financial markets. There was the OPEC oil embargo, which also challenged the markets. So a lot of headwinds for that presidency. Bush as well, like I mentioned, he started the presidency at the start of the dot-com bubble and had the beauty of finishing his tenure with the great financial crisis. So not a very exciting 8 years for him there. So what is this graph essentially showing us, though? That the S&P 500 has consistently grown in value over the long term, no matter who's in office. Now, with that in mind, right, you see, oh, well, the Democrats have had better 4-year annualized returns. It looks like the Republicans were the only ones that had negative returns over certain time periods. Is there any way I can game the system where I can just invest when there's a Democrat in office versus a Republican, or vice versa? And you'll see here that the numbers show. If you were to do that, if you were to invest during Republican presidencies only, you would get a 2.8% annualized return over the last 60 plus years. So your $10,000 would have grown to $77,000. Not the best. If you were to do Democrat presidencies only, your levels of growth would have annualized 5.1%. Your ending value would be $405,000. And at the end of the day, if you were to invest, regardless of who's in office, stayed invested, your $10,000 over that time period would have turned into $3.15 million, or an annualized return of 8.05%. So essentially, regardless of the party occupying the Oval Office, staying invested has been the most prudent long-term strategy. If you're finding any of this interesting, please leave a like and subscribe. We're going to continue to grow this channel, focusing on personal finance and investing, so really appreciate the support. Okay, so this is probably the most compelling graph. As you can see here, higher average annualized returns have occurred during a divided Congress, where one party controls the House or Senate, and the other holds a majority in the second chamber. Lower returns have come during Democratic majorities in both the House and Senate, while higher returns have taken place under Republican control of both congressional chambers. In any case, the market has historically been positive under all 6 government compositions. So why might this be the case? A divided Congress means more certainty. In other words, we're less likely to see sweeping regulatory changes that can severely benefit or be headwinds to a given sector or industry. And so, with that in mind, a divided Congress means less extreme changes and therefore more predictable outlook in the markets, which investors tend to like. And so, at the end of the day, with all these sort of questions being asked, should you make changes to your portfolio ahead of the US election in November? It's obviously difficult enough to predict who's going to win, let alone know which items from their political agenda will be prioritized and implemented if they're sworn in. So, what have we seen over the last 100 years? Equity markets have generally risen regardless of who's in office, and generally elections are creating more noise than any sort of actionable investment ideas. So, at the end of the day, what have we seen? Investors have been best served sticking to their long-term investment plan rather than trying to profit from politics. So, I hope your Democrat and Republican friends can all agree on one thing, that staying invested regardless of who's in the Oval Office has paid off over the long term, and you can find some common ground. And I wish you the best of luck in your investment journey, and we look forward to seeing you next time. Take care.